Tesla missed their 2024 delivery estimates, and their stocks have suffered as a result. So I want to talk about what happened, why it happened, and what the future of Tesla might look like in an era where they're no longer hitting sales goals. But first, the details. Tesla stock slides after Q4 delivery miss, first yearly sales decline. Tesla stock skidded to a start in 2025 following a big fourth quarter delivery miss and an overall down year for the electric vehicle maker. For the quarter, Tesla said it delivered 495,000, almost 496,000 vehicles globally, missing analyst estimates of around 510,400 vehicles as compiled by Bloomberg. This figure is above the 463,000 delivered last quarter and the 484,500 delivered a year ago. For 2024, Tesla delivered 1.78 million vehicles, missing analyst estimates for 1.8 million and resulting in a total below 2023's 1.8 million vehicles delivered. This is the first year-over-year decline for Tesla, hinting that new competition, demand, and global economic conditions may be hurting the company. Tesla stocks fell over 6% on Thursday, and we can verify the drop for ourselves. Here is Tesla stock. If we look at the last month, down from the peak around when this news started to come out, we can see they're down about 15%, and I think it came out on either the 3rd or the 6th, but in any instance, Tesla is still down about 4%, but from the peak last month where they're down about 17%. So people are clearly reacting negatively to this news. And I think we're all aware that Tesla has been losing market share recently. There are a lot more competitors in the space as Ford, Toyota, GM, and all the other car companies saw how successful Tesla was and started making their own to compete. All this new competition led to kind of an expected slowdown, but I think an actual decline is what caught people off guard. Slowdowns happen in every company eventually, but an actual drop or a decline, that's something to be worried about, especially with a stock like Tesla, which is pretty volatile, and a lot of people already think it's overpriced. So they're very quick to sell, but they are also quick to buy because of how much the stock fluctuates in a given quarter. And lots of people think it's overpriced because of one specific reason. If you look at the list of the largest automakers by market capitalization, this is the total worth of the company according to their stocks, Tesla is at number 1 and is almost 5 times the number 2, which is Toyota, and the only other mainly electric car company, BYD here, it is over 10 times the size of BYD. So it is by and large has the highest market cap of any car company currently, and probably any car company in the history of car companies. But when you look at another chart, top publicly traded automakers by revenue, so how much money they're actually making, Tesla's not on top. It's not the second, it's not the third, it's not the fourth. You have to go all the way down to spot number 10, where it makes $97 billion. So it made $97 billion. This is by year, I think. I'm not completely sure, but in any instance, it is the 10th highest grossing car company in the world, but it is the number 1 by market cap by a margin of about 5 times the one right below it. So a lot of people look at that and say, well, that doesn't add up. They believe that it's not making nearly enough money to be priced as highly and at the premium that it is. However, a lot of people are excited because if Tesla figures out some big future plan with AI or robots or robo-taxis, then it could blow up in market capitalization and become a really great buy if you buy in now. But as far as the total Tesla stock goes, people seem to be really cautious right now, primarily because of this delivery miss. But all that aside, Tesla is a household name by and large. So why is a company that is so well known dropping in sales? And I think there's 3 main reasons here. The first is competition. The second is just general concerns with EVs, which isn't a Tesla specific problem, but a EV wide problem across all companies, and also the popularity of Elon Musk himself. And I want to start with the last one, because I think it's the most important, and 2, it's the one I want to talk about least, so we may as well go ahead and get it out of the way. I don't think it's a secret that Elon Musk has strongly associated himself with Donald Trump and the Republican right wing. And I'm not making any comments or value judgments about politics. Frankly, I don't really care. You can do whatever you want. But when you associate politically as a company and as a person like Elon Musk, who is synonymous with Tesla, then you alienate everyone who is on the other side of the aisle. And there was a survey from last year that seems to support this. Buyers are avoiding buying Teslas because Elon Musk has become so toxic. Elon Musk's toxic behavior is seriously starting to affect Tesla's bottom line, experts say. And this article is a bit biased, but the core of what it's saying about people being turned off by Tesla because of Elon Musk is true. According to a recent survey by corporate reputation management platform Caliber, as first reported by Reuters, the carmaker's reputation is plunging in part due to Musk's off-putting and problematic behavior, putting off potential buyers. The slide is happening in real time. The values for Tesla's consideration and trust and like scores put together by Caliber have fallen 8 8% from January, while those of German automakers including Mercedes, BMW, and Audi rose during the same time period. In other words, Tesla's sluggish sales aren't just a result of rising interest rates, a surge in competing offerings, and a slowing overall demand for EVs. Quote, "It is very likely that Musk himself is contributing to the reputational downfall," Caliber CEO, however you say that name, told Reuters. It's the same kind of issue that Target had when it alienated conservatives, and Target stock took a massive hit because of the following backlash and boycott. Elon Musk is strongly associated himself with a political party, and it doesn't matter what side of the aisle you on or what party you support, it is bad for business to politically align one way or the other. Basically, all the companies that have done it have suffered in some way, and what we're seeing here, at least partially, is probably a fallout from that. But there are reasons outside of Elon Musk himself, the second of which being that competition is pretty stiff. But before we talk about competition, if you like this kind of business news deep dive, I post 1 or 2 times a week. I'd love a subscription and to see you around here on some other videos. Now, the competition is from other car companies like BYD, but it's also from other kinds of cars, specifically hybrid cars, which are becoming more popular than EVs. As EV sales flatten, hybrid sales are continuing to go up as people seem to be more interested in buying hybrid cars than they are buying EV cars. Now, for the company competition, BYD is the biggest one. It operates out of China and is really good at making cheap electric cars that function quite well. And not only is it good at making them, but it is kind of absolutely eating Tesla's lunch, as you can see here. China's BYD outsells Tesla in Q4 to top 4 million EV goal for 2024. BYD surpassed its 2024 sales target of 4 million electric vehicles with just over 4.27 million, up 41.3% versus 2023. The Chinese EV and battery giant is likely to overtake Honda and Ford in 2024 global sales, according to various reports. In Q4, BYD sold 595,413 fully electric battery vehicles, or BEVs. That easily topped Tesla's, which has delivered 595,570 units globally, a quarterly record, but still missing analyst estimates, and that's the headline that we had just referenced. For reasons that are too broad for this video, Chinese car manufacturers seem to be able to create EVs that are better, they can make them faster, and they can make them far cheaper than we can in the United States. And as a result of that, they are absolutely exploding in growth, and the United States car companies are kind of struggling. You're probably aware that the EU and the United States have both imposed tariffs and are considering imposing more tariffs on this, but so far this hasn't had much of an impact, as BYD's international sales are up 70% this year compared to last year. But it's not just the EVs that are making things really difficult for Tesla in a time when they're trying to grow. There's huge competition from hybrid cars for electric cars. You can see in this article from 2023 where they talk about it some more. More US auto buyers are turning to hybrids as sales of electric vehicles slow. But so far, while EV sales are growing, their pace is falling well short of the industry's ambitious timeline for transitioning away from combustion engines. Instead, buyers are increasingly embracing a quarter-century-old technology whose popularity has been surging, the gas-electric hybrid, which alternates from gas to battery power to maximize efficiency. So far in 2023, Americans have bought a record 1 million plus hybrids, up 76% from the same period last year, according to Edmunds.com. As recently as last year, purchases have fallen below 2021's total. This year's figures don't even include sales of 148,000 plug-in hybrids, which drive a short distance on battery power before a gas-electric system kicks in. Remember, this article is from about 14 months ago, but the trend continues, and we can see from this CNBC article from April of last year. Why hybrid sales surge as EV sales flatten. So this is a continuing trend that we are seeing. After years of being overshadowed by flashy electric vehicles from Tesla and others, the hybrid, a gas sipper that has both an engine and an electric motor, is back in the spotlight. EV sales have slowed in the US, according to car website and data tracker Edmunds, so it's the same company putting out this data, with the time it takes for a car to sell once it lands in a dealer's lot having gone from 25 days at the beginning of 2023 to 72 days just over a year later. That metric, called days to turn, is a good measure of the popularity of a car. The nearly threefold jump in days to turn for the EVs is stratospheric rise, and it doesn't match trends for other vehicle categories. Plain old internal combustion vehicles, which started 2023 at 34 days to turn went to 52 days to turn in the same time period, according to the Edmunds data. But standard hybrids easily beat out the other categories in popularity, going from 16 days on the lot, which is already really fast, to 25 days in the same amount of time, data from Edmunds shows. Hybrid sales grew 5 times faster than EV sales in February 2024, according to Morgan Stanley. So for a multitude of reasons, some of which we'll talk about here in a second, hybrids are outselling EVs, both in their popularity and how long it takes to actually sell it, but also in the amount of sales and the sales growth over the long term. And that takes us into the last reason, which kind of goes with the previous reason, is that people just kind of have reservations about electric cars. I mean, you've got maintenance, which is more expensive on electric cars. You have to charge it, which can be really inconvenient if you're out on the road and need to find a charging station. It also takes a really long time to charge. It can take like 2 to 3 hours. The prices are also much higher for electronic vehicles, especially in the United States, so on and so forth. There's so many reasons why it's just easier and more convenient to own a hybrid vehicle over an electric one. And lots of people seem to be agreeing with that because the sales of hybrids are going up while the sales of EVs are kind of flat. So that's all the issues that are going on with Tesla now. And as for what happens next, it kind of depends on whether Tesla is able to deliver on some of the promises they made in 2024 about the future of the company. For example, the robotaxi and the robots have an absolutely massive potential. If those can be mass produced and shipped out to suppliers everywhere, then I could see a world in which that generates a gigantic amount of money for Tesla and also puts them back in the spotlight as the company that is driving the future of automation. But it's also hard to say if that can actually happen. Tesla has tons of good ideas that can all make lots of money, but the real question is whether they can execute on those ideas and actually turn things around. Thanks for watching.